Hello and welcome to the Islamic Finance Show. The growth over the last decade in the Islamic finance industry has enabled the sector to offer additional products for consumers. One such product that has attracted the most interest and often the most controversy has been the Islamic mortgage. On today's show, we'll be finding out exactly what an Islamic finance mortgage is, and we'll be tackling the tough questions head on. Right now, it's time to introduce my guests for the day. We have Dr. Samir Alamad, the Head of Sharia Compliance and Product Development at Rayan Bank, and Badr Al-Hasan, a Sharia scholar and partner at Dome Advisory Limited. Welcome to the show. Thank you so much for being with us. It's a pleasure to have you. So let's jump right into the first question. So essentially, mortgages are financial products that are there to help consumers make their first buy easier. If you could expand a little bit on that, Dr. Alamad, in regards to what Islamic mortgages really are, and perhaps how they differ to conventional mortgages.
Sure. Unlike conventional mortgages, where the customer borrow money from the bank and return the money with interest paid to the bank, Islamic finance is based on various structures. One of the most common structure that is used by Rayan Bank is diminishing musharaka, basically diminishing co-ownership, with ijara, lease agreement, where the bank and the customer enters into a partnership to buy the property together, each according to their respective share in the property. And the customer will pay rent for the share that owned by the bank. Over the finance term, the customer will make payments to buy the bank's share in the property. At the end of the finance term, the customer will acquire the property outright.
Oh, so over time is a trade of ownership. As the customer makes more of a payment against the house, the equity of the house comes into...
Exactly. So the customer share in the property will increase and the bank's share will decrease respectively.
So what's the pivotal point that makes it different to a conventional mortgage?
It's basically the Islamic finance principle that's used to structure this product and offer the home finance product to customers. This structure eliminates the customer and the bank being involved in interest-based lending.
Right, okay.
Both of them would be partners in the property in their respective share in the property. And the bank's profit is made from the rental element that the customer pays to the bank for using the bank's share in the property.
Perhaps the two fundamental aspects of the mortgage, one is risk sharing.
Yes.
And the other is the elimination of interest.
Yes.
So one of the key sort of criticisms of Islamic mortgages when it comes to sort of today's offerings is that it seems to consumers that Islamic mortgages are merely conventional mortgages, but dressed up as halal.
It's interesting that you talked about the concept of risk sharing.
Yeah.
Now, it's important to look at how that risk is shared and what would happen in different scenarios.
I mean, in terms of the sharing, we'll touch on that in a minute, but what do you think specifically about the fact that consumers have this critical point about
in answer to that question, I was going to, because the risk sharing is fundamental to the Sharia compliance.
Sure.
So if the risk isn't being shared, then we'd have to then ask, is it Sharia compliant? And that's what the consumers are asking.
I mean, the consumers are really interested in the fact that is interest really not part of the Sharia compliant model that is being offered by banks such as Rayan, for example?
Yeah, and the answer to that is if the risk isn't being shared, then effectively what's happening is interest is being charged.
Right.
You see, so that's why I want to focus on the risk sharing. And the scenario I'd like to look at is, for example, within an Islamic bank giving a mortgage, there is a statement that risk is shared. But if you look at the scenario where suppose the house goes into negative equity. Suppose the house is bought for 100,000. The bank puts in some. The customer puts in some. After a while, it goes into the price is 80,000. So it's gone into negative equity, and then the customer loses his job, so he can't make his monthly payments. So what would happen in that scenario? Would that loss of 20,000 be shared between the customer and the bank?
Would it? Would it, Dr. Alamad?
Basically, when we say loss, is basically when this loss materializes. Managing risk is different from risk sharing. It's fine from an Islamic perspective that any risk involved in the financial transaction that should be shared between the parties. However, that doesn't mean that the parties cannot manage the risk in a Sharia compliant way. So when we say in the negative equity situation, the loss will materialize if the property was sold. The bank will not force the customer to sell the property in a negative equity situation at all. However, if the customer wants to sell the property, in that case, then the customer has to make a business decision. As selling the property in a negative equity situation, that will harm the customer financially and the bank at the same time. So in this case, the customer will buy out the bank's share in the property if the customer insists on selling on a loss. Let's just take it as two partners in a business.
But what if, let's say, I mean, in that negative equity situation, let's say they won't sell. They understand this clause, the customer understands this. What are their alternatives? How can the bank support them in not doing this?
There is no reason for the customer to sell in a negative equity situation.
No, of course there is. They said there's a downturn in the housing market.
If the customer loses the job and they can't make the payments, what will the bank do? Will the bank foreclose?
That's fine. There are certain processes. The bank will support the customer in that case to ensure that the customer still owns their property and they will not be forced to leave this property.
Support how?
The bank will understand basically their financial circumstances. There are various options and ways for the bank to manage this, giving the customer payment holidays, rent-only option, so they don't have to buy the bank share in the property. That will reduce their payments.
Yeah. And would they be exposed to things like traditional banks in this case would bring in late fees and charges and all sorts of those things? Do those exist at all?
This is an important point you raised, basically. Unlike conventional mortgages, Islamic banks are not permitted to benefit from customers' misfortune or financial difficulties. So they cannot charge them compounded interest. They cannot charge them penalty fees for defaulting.
What about repossession?
We don't call it repossession in Islamic banking. We call it exiting the agreement.
Right.
And that will be after very long process that has to be...
Isn't negative equity also exiting the agreement?
No. Negative equity is the customers making the payment as usual. However, the property value depreciated in the market. That means both parties basically acknowledge that depreciation in the property value. And it's a common business sense. If the value of your stocks or assets goes down, you don't sell. You hold on it until the market recover again if you want to sell. If
they don't, and coming back to the point of repossession, you said you don't call it repossession, but essentially it is repossession, doesn't it?
No.
If you take their home away, do you not take their home away?
Repossession is basically a traditional term for conventional mortgages, because the bank, under the legal charge, the security takes over the property, will repossess the property from the customer. Because the customer defaulted on the loan. Here, the customer is a partner with the bank in that property under the diminishing musharaka agreement. So in this case, it will be exiting that agreement rather than repossessing, because basically that's the difference. Despite the bank holds the legal title.
What do you think,
let's look at the exit scenario. What if you have a situation where the customer, as I said, lost their job? And they can't pay the monthly payments.
A very realistic situation.
And it's not realistic for them to stay in this property because they can't afford even the rental and not the repayment. It would be interesting to see how long they give them without making repayments. I mean, if it's 6 months a year, I doubt a bank will allow a customer to stay indefinitely without making repayments, because the bank's in there to make some money. So there will be a time, at some point, the bank will actually come in. We may not call it foreclosure because that's a technical legal term, but the bank will force a sale. And when that sale happens, and if it's still in negative equity, then a loss will be made on the house. Now, is that loss shared?
So let's say you do treat the customer fairly, everything goes to plan, but we get to the point where the bank has to sell the house and it's a negative equity. So now, does the loss only lie with so if it's a £100,000 house initially, but it's only sold for 50,000, is now the customer liable to pay the bank 50,000 after that sale?
Okay. It's basically what triggers the sale. The bank will not force the customer to sell it. If the customer is not able to pay their monthly payment, the bank will facilitate that to the customer, so the customer can stay in their home, and will make certain arrangements and plans for the customer as long as that's required, and the process will be considered from a Sharia compliance perspective. However, if the bank give the customer all options, and the customer insisted on selling the property in a negative equity situation without any justification or rationale after giving the customers all the options, then in this case, as partner in the property and under the musharaka, which is sharikat al-mulk, partnership in an ownership, scholars basically approved that the customer will buy out the bank's share in the property, in this case, on the initial sale price.
But how does it
because otherwise, basically, the customer will be triggering. It's fine if they accept the loss for themselves, but they shouldn't be affecting other parties or partners in that transaction and harming them from that perspective.
Okay. Bear with me briefly.
I'm keen to get to the bottom of that question, which is
we haven't got long, so do briefly.
Which is because we've heard that he said the bank will never come in and force a sale, and I'd like to get to the bottom of that, because I'd be very surprised if the customer cannot make any monthly payments at all. The bank will allow them to stay in the house.
I will delve into that. I'll make sure we delve into that after the break. But we're already out of time. The break's upon us, so we'll go to break, and then when we come back, we'll get back onto it.
Okay.
So when we come back, we'll be taking a hard look at whether banks truly share in the risk of Islamic mortgages they offer, and whether ultimately these financial products are as halal as the banks say they are. All this and more right after the break. Don't go anywhere. Hello and welcome back. Before the break, we were discussing whether Islamic mortgages truly differed from traditional mortgages, or whether it was just a matter of changing the word interest to service fees. To continue the discussion on Islamic mortgages, still with us are Dr. Samir Alamad, Head of Sharia Compliance and Product Development at Rayan Bank, and Badr Al-Hasan, Sharia Scholar and Partner at Dome Advisory Limited. So, gents, we had a fiery part one. Let's start right where we dropped off. We wanted to touch upon the point of the diminishing structure contracts, as well as this idea of repossession. Let's start with repossession.
Well, I'm an Islamic finance lawyer. I've worked in a major English law firm here and in Dubai, drafting Islamic finance contracts for all the major banks. And as you know, with legal contracts, it's all in the detail.
Absolutely.
And so, as with this contract, what would happen in a situation where the customer simply cannot afford to stay in the property anymore, and it's in negative equity, the bank would force a sale, and when that loss is realised, the bank would not share in that loss. In the same way that if there was positive equity, the bank would not take any of that, the customer would take that. So the outcome is that we don't see any sharing of risk or reward in this contract.
So therefore, am I right in saying it's not Sharia compliant?
Well, that's for everybody here to decide.
Okay, very, very interesting. And what do you think about that, Samir?
For us, I mean, we can say that's not the case, 100%, and we haven't had any the traditional term repossession or exiting this agreement at all. We don't have any customers defaulting. What I said is the process that we look at, if that was the case or if that is to happen in the future.
Are you saying that the customer would be allowed to stay in the property indefinitely, forever, if they can't afford to be there?
No, we need to be sensible about when we say leaving the customers indefinitely. We appreciate that any one of us could, have a financial difficulties.
I mean, but just from a technical point of view, from a business point of view, the customer wouldn't, like you say, be able to stay indefinitely, because it's just not viable business proposition at all.
Exactly. Eventually, it's a business. It's not a charity. And the bank is a trustee when the bank uses the customer's savings to provide finance to those customers who are looking to buy their properties. The customer's acting from a Sharia perspective as a trustee. So the bank is acting as a trustee, and the bank is responsible to ensure that the customer's deposit that used to finance this customer to buy their home is not basically lost. The key issue here, I think, when Bilal talked about the details in the legal agreement, and that's this is something I personally experienced. Legal firms here in the UK, they try to basically to twist the structure of Islamic finance product to mimic the legal structure of traditional products. For them, that's what they prefer to, that's what they are familiar with.
Sure.
And I personally deal with them, and I try to force the Sharia element in the contract.
Sure.
However, they try to fight that because it's an area they are not knowledgeable
of. Course.
Whether you see it in the legal terms, and I'm happy to share the legal terms of our home finance with any legal expert to decide this and the processes to ensure that this could be the case. I'm not saying basically all Islamic banks around the world are 100% following the Sharia rulings
I think that's
for
now
our products.
For people at home
there are maybe some
gaps.
I think we've got our answer, which is the customer will not be allowed to stay indefinitely, and there will be a forced sale.
But that doesn't make any sense when you say the customer's allowed to stay indefinitely.
It doesn't make sense. That's why you would force the sale.
I understand, gentlemen. I think the key point is to Badr, I say it doesn't make sense from a business perspective. But at the same time, this isn't just a traditional business. So they are both sides of the coin. There's a Sharia aspect and the business aspect. And I think it's clear, the argument is clear from both sides. And I think there's enough on there for the consumers to make their mind about what scenario, what would happen.
Now, let's come on this point about does it make sense from a business perspective? A bank will say, it doesn't make sense for us to give you an interest-free loan from a business perspective. So if business dictates we have to charge you interest. That doesn't make it halal. So that argument doesn't really apply here.
That's not the right logic here. If you are renting a property and you defaulted on making the rental payment, the landlord is legally and from a Sharia perspective
as a landlord, you have the remedy of forfeiture. The bank is not acting as a landlord here. The bank is actually doing the exact thing as foreclosing. There's a difference between the two.
Like I said, there's two perspectives. I understand, Alamad. There are two perspectives. Let's move it along, because there are other very, very important aspects just as that we want to touch on. The next question actually for Badr is that when banks acting on behalf of consumers, Islamic consumers who want to take out a mortgage, they purchase the property on their behalf. It seems like critics have said one of the key critical aspects is that the banks do it through sort of I don't know if independently set up corporations or organizations that do it on their part, and then technically they are no longer, because it's not in their name, sharing the risk. In your experience, do you find this to be true? And if so, what are your views on it?
I'd like to explain this using 3 scenarios, if you don't mind. The first scenario is, if I'm a bank and you're the customer, and I give you an interest-free loan, a Al-Hasan of £100,000, and you pay that back in a year's time, that's halal. It's an interest-free loan. But at the same time, if you give me a promise, we call it a wa'ad, to give me a gift in a year's time of £5,000, separately, that's okay. You're promising to give me a gift, right? But if I would only give you the interest-free loan, if you give me the promise as a gift that's legally enforceable under English law, then would we say that the two are actually factually interdependent?
Right.
I think that's a factual question that everybody here, including the cameraman, could answer. You don't need a Sharia scholar.
But in what instance?
No, I'm going to go to the next scenario. Then you'll understand why I'm giving the scenario. It does apply.
Who would give a promise?
I will understand. So then we'd treat the Sharia law would say that actually that loan, interest-free loan, and the promise are connected. They're interdependent. And therefore, it's actually an interest-bearing loan. Right. Now, if we do the same thing, we could do it with the sale of a house. Right. So instead of now giving you a loan and then a promise, we could say, well, this is a house. Why don't we go into partnership on the house? Right. But then you give me a separate promise on a separate piece of paper to buy my share at exactly the amount I put in. So my capital's protected. Right. And that's enforceable. So we've still got the promise. And then, of course, I want to charge the equivalent of interest. So then I'll enter into another third agreement with you, which is the lease, by which you will pay me £5,000 rent by the end of the year. So we've got the same economic outcome, but what we've done is we've combined 3 contracts here and produced the same outcome. Right. Now, I'd like to ask again, everybody else, this is an empirical question, not a Sharia question. Are the 3 contracts interdependent?
Of course they are.
You believe that. What does the Rayan Bank believe?
Well, I'll tell you what the scholars believe, and that's according to the Accounting and Ethics Organization for Islamic Financial Institutions.
Okay.
They are basically the Sharia body. They have a Sharia board, and they issue Sharia standards for the Islamic finance industry. And if you refer to their Sharia standards, you will see the diminishing musharaka standards for home financing. And what Al-Rayan Bank follows follows this standard.
So does that standard...
The Sharia Supervisory Committee...
Do you think the three contracts are interdependent?
Give him a chance, Badr. Give him a chance to...
The Sharia Supervisory Committee, then they provide their Sharia views based on the details according to the jurisdiction that the standard is applied in, etc. Using unilateral promise, that's in a financial transaction, not bilateral, unilateral promise, that's acceptable from a Sharia perspective, and that's not my opinion, that's the opinion of those well-known scholars in the industry. So we just need to take the things into perspective and not to put basically various agreements together.
And what's their opinion on Badr's scenario? What would their opinion be?
What the brother mentioned about the qard and the gift, that's nobody can argue that is fine. But he used the wrong analogy to reflect it on this contract. This is what's known in the Sunnah and the Prophet Muhammad sallallahu alaihi wasallam hadith that he said, two bay'atayn fi bay'ah, two sales in one. This is basically, that's the typical example in the classical books of fiqh.
The promise given was unilateral. It wasn't bilateral, but it's connected. It's interdependent.
That's the typical example in the classical books of fiqh. Basically, the classical fuqaha, they used the qard, Hasan example with the gift because they are interconnected, basically, and it's a way around charging interest or taking benefit over the qard. This is not the case when you use a standalone diminishing musharaka agreement. Then as partners in the property, you enable the other partner to lease your share in the property. Ask any scholars about this, they will not say this basically contingent on the other.
And what's the third part to that scenario?
The unilateral promise. Unilateral promise is used in various financial transactions, and there is the fiqh.
So you're saying that in that scenario, those three things would not be connected and independent at all?
The ruling of the Islamic Fiqh Academy, those are basically the Islamic scholars representing all countries all over the world, they said this unilateral promise is binding from a Sharia perspective if the promiser incurred basically cost or started or involved in a transaction. And from in their view, this is acceptable to be used as binding promise to basically to ensure that the legal rights and the Sharia rights involved in the financial transaction are protected.
Okay, great, thank you. Very briefly, Badr, because we're near the end of the show, any remarks on
I mean, I've studied Sharia, and I'm also AWFI qualified as a Sharia advisor and auditor, and I'm actually appointed on the AWFI panel to review the Sharia standards, and I've had meetings with Mufti Taqi Uthmani, who's the chair of the board in Medina, specifically on this subcommittee. So I do understand the Sharia issues. It's not the Sharia issues that are at question here. It's whether or not factually they are interconnected and interdependent, and that's a factual question with anybody with a sane mind can answer, all right? The moment I asked you the question, you said, of course they're connected, because you can see that they're connected. And I'd apply the but-for test. The but-for test will tell you if they're connected. Would the bank enter into the partnership contract if the customer says, I will not give you the promise? The answer to that is no, which means they must be connected.
Badr, thank you so much. You've made your point very clear, and I appreciate it. Time to end the show, unfortunately. So, of course, we've continued our detailed exploration of Islamic finance as the series has progressed and will progress. Now, if you have any relevant questions or issues you want discussed on the programme, please tweet us at Islam Channel or contact us alternatively via Facebook on islamchannel.tv with the hashtag #TheIslamicFinanceShow, and we'll do our best to address them. Next week, we'll be discussing the position of Islamic finance in the UK, so do join us for that. My thanks again for Dr. Samir Alamad and Badr Al-Hasan for joining us today, and of course, thanks to you for watching at home. Until next time, take care and goodbye.